Welcome to JT Invests in You. I have such an exciting episode for you today. Today I'm hosting the CEO of Vesta Equity, Michael Carpentier. Now Vesta Equity is leveraging the Algorand blockchain in order to tap into the home equity market that currently sits at about a $21 trillion market. Currently, Michael's company is allowing homeowners to tokenize the home equity they have in their house and sell it to investors rather than using traditional resources such as a home equity line of credit and indebting themselves just to access the equity in their own home. This is a great use case for the Algorand blockchain, and I'm super excited for this interview. Stick around, I think you're going to like what you see. All right, so we have Michael Carpentier here from Vesta Equity. I really appreciate you coming to the channel.
I'm very happy to be here, actually. Thank you very much for having me.
This is actually the very first interview I've hosted on the channel, so I'm pretty excited about it. So how about we just start off with you introducing yourself and telling us a little bit more about your company?
Yeah, so my name is Michael Carpentier, and I'm CEO and co-founder of Vesta Equity. I have several co-founders that have partnered up with me to build this business out, without whom I could not have built it out to the point where it is at right now. Imran Rahman, who's our Chief Operating Officer, and Taylor Pintz, our Chief Technology and Product Officer. And basically what we did is we took a look at the home equity financial services marketplace and said to ourselves, how can we apply blockchain into this ecosystem and basically unbundle all the financial services built in and around that? Because if you take a look at accessing your home equity, it really hasn't changed in over 100 years. And the way you borrowed money against your home was the same in the early 1900s as it is today. What has changed is the digitization of that process. It's become more automated, but fundamentally the business model hasn't changed. And we said blockchain can be applied to that process, not only to tokenize an asset, but then to also create a marketplace for that asset and a secondary marketplace for that asset. And by doing that, we enable both a homeowner and investor to access that marketplace and be able to trade in real estate tokens and be able to facilitate a better way for them to access wealth and make investments. And that's fundamentally the model, and that's how we've built it. It's definitely a different approach than what exists in the marketplace right now. And we feel it's a more even playing field for both parties. And part of our mantra is to democratize wealth creation, make wealth, the ability to create wealth easier for both a homeowner or a potential homeowner, as well as investors, and create that transparency and that fluidity in a marketplace. So that's essentially it in a nutshell.
Well, that's perfect. I mean, you touched a little bit on some of the ways it's done in the industry currently. Could you just quickly describe what home equity is and how your service differs from a traditional home equity line of credit?
Sure, absolutely. So typically, when you have an asset like a home, it has equity in it, right? So if the home's worth $300,000, there's $300,000 in equity in it. Typically, how someone would access that equity is one of two ways. They would sell the house and sort of exit the house, which unto itself brings a lot of additional costs and a lot of disruption in your life. And it's not necessarily a great path, but some people have to pursue that path. The other way is you just borrow against it. So essentially, the idea behind borrowing against it is you say, I want $50,000 of that equity. I want to access it. Go to the bank. The bank uses that home as the underlying asset, and you borrow against that. Then you're suddenly in a situation where you're paying payments to that debt, right? You've got access to the 50 grand, but you're paying towards that debt now. So you've got monthly interest payments, compounding interest payments, everything that comes along with that, the risk of foreclosure if you miss payments. So there are all those elements that come into that traditional mode of accessing that equity. With us, you'd say, I want to access $50,000. You tokenize $50,000, put it onto our marketplace, and investors would then invest and purchase those $50,000 of tokens. It could be a couple of investors, it could be 50 investors, it could be one investor. It really depends on the dynamics in that particular region and which investors are looking at that property. But then suddenly you have partners in your property in that sense. You retain all residential rights. So a lot of people don't realize that when they actually go get a mortgage and do other types of financing, the bank has a stake in your home. They technically are co-owners, legally are co-owners of your home and can foreclose on your home if you violate the terms and conditions of your agreement. So in this case, there's that risk has essentially been eliminated. Clearly, if you start, not paying your insurance or your taxes, clearly we have mechanisms built in to deal with situations like that. But it's a very different type of dynamic. And we feel the whole dynamic of homeownership as a result can change that. People can actually enter into the marketplace. So if they're looking for a forward mortgage, they could say, hey, I have $100,000. I want to buy a home. I don't want to be burdened with monthly payments on the home. This is the home I want to buy. They take that home, they put it on the marketplace. They say they've got $100,000 invest, and they look for co-investors. So suddenly that dynamic's different, right? And then you could say, I own that stake in that home now, but I want to sell that because I want to upgrade my home. So you sell off your stake in that home with the residential rights to another person who wants to invest in that home or acquire that home and have the residence there. And they still have those investor partners. And those investor partners could be trading their tokens on our secondary marketplace as the market evolves and they decide to enter or exit specific markets and specific residential geographies. So it really creates a very different perspective than an approach than what we're seeing right now with traditional mortgages where you're locked.
Yep.
That's the bank. You're locked in for whatever time and term that loan is for. It can, if it's a forward mortgage, it could be 20, 30 years where you're paying that compounding interest, and even a small amount of interest on a small amount of money compounds annually. And people are surprised sometimes what they end up paying. If you have like a $300,000 mortgage at about 3% interest rate, for 20 years, you pay the bank $115,000. That's a lot of money.
Yep.
And very different under our environment where you wouldn't be in that paradigm or that model where you're constantly paying out interest.
Yeah, that's really interesting. One thing that I didn't really send over to you for a question, but has me wondering, say you tokenize about, say, like 30% of your home equity. What happens upon closing, like when you go to sell your home?
So we'd refer to that as an off-chain sale. So same mechanisms come into play as if you had a mortgage from a legal perspective. So it'd be an off-chain sale. The home would sell. The 30% or 70% retained by the homeowner would be given to the homeowner, and then 30% would be paid off to the token holders. We have mechanisms in place to ensure that the homeowner sells near appraised value, and there's a part of the terms and conditions. If they sell below appraised value, they do have to make up the difference to the token holders. We've done that in the off chance that some people will sell off 50% of their home and go, I don't care about the rest. I'm just going to sell it at a loss. That's not fair. So we built in those mechanisms to ensure that they make up the difference. And we again don't want to have to deploy those mechanisms, but we can certainly force the issue and actually, in that case, foreclose on the house and say you can't do that, or stop the sale and say you can't do that. But if they do want to do it and they agree, they pay off the difference to the token holders in that case. Now, if the home has depreciated in value, it has depreciated in value. And that's why we initiate a second appraisal on an off-chain sale. Now, what we're hoping over time is that people won't want to exit the entire house. They'll just take their portion they own and sell it to another person who wants to have residential rights to a home, and the current investors and token holders in that home will continue to own it and trade it as they deem fit.
Oh, that makes sense too. Yeah. That's actually something I never really considered. That's really interesting. Cool.
Yeah, it's changing the dynamic or concept of home ownership, because right now you're hearing a lot of, and it's very personal for me when I hear them say to Gen X, not Gen X, but millennials and Gen Zs, that you will be happy renting the rest of your life.
Yep.
Well, someone owns that asset. That's not fair. That's not a great message to send to generations coming up the pipe that want to own their own home. Now, home values are appreciating at ridiculous rates, and they're getting very, very expensive. So why not enable a platform or enable a solution for these generations to actually buy into it? And it's personal for me because I've got children, right? And my partners have children. Are we basically telling that generation, wealthy people will own those assets and you won't, and you'll rent and pay into their wealth? That's a preposterous statement that they're making right now. And it really strikes me personally because I don't want my kids renting the rest of their life. I want my kids to be able to access the market and start building wealth and use a mechanism like this to build wealth. So it's very personal from my perspective. And I feel it's definitely a dynamic that could evolve and allow more people. And that's why, democratizing wealth for us is really important. More people to actually access the home equity market and actually own a little piece of their real estate and then grow it from there over time.
Yeah, that makes sense. With the real estate market through the roof, and then news with companies such as BlackRock buying up a whole slew of neighborhoods, what do you what are the prospects for future homeowners? It seems we have a much larger hurdle than the generations before us.
You do. The hurdle is obviously the bars being raised,
Yeah,
which typically happens in economies, and then new models need to evolve in order to be able to accommodate those changes. And we feel our model does that. Yeah, BlackRock's buying up large chunks of real estate, and they're one of the big proponents behind you'll be happy renting the rest of your life.
yeah, creating a renting class.
Yeah, creating a renting class, right? Which is fine. Some people will do that. They'll rent the rest of their lives because that's a decision they make, and it's a big buoyant market. But we want to offer an alternative to that. You'll rent the rest of your life type approach.
For
Um,
sure.
Over time, will BlackRock maybe change their song and dance? Will the market dynamics change as a result of businesses like ours and potentially others that'll enter the marketplace? Definitely. I think BlackRock has a philosophy based on the now and based on some idea that they have of the future. They're a big, massive fund with big, deep pockets. They can change dynamics because of that money, but at the same time, larger empires have been fallen by tech companies in the past, and that definitely happened in the future. Sears didn't invent Amazon, even though they were one of the largest retailers on the world. And look where Sears is now, and look where Amazon is right now in a very relatively short period of time. So BlackRock obviously wants to pursue the strategy they feel is in their best interest right now, but from our perspective, that's not the future. And I think people will, for the most part, rebel against the idea of thinking, hey, I can never own anything. I'm going to have to rent the rest of my life. I consider it a preposterous approach, and my partners feel the same way. And we feel a lot of the population out there is going to end up feeling the same way as well.
Now, do you think we're in a bubble right now, similar to that of 2008? Or do you think housing costs are up because of supply chain issues from COVID, lumber's through the roof and so forth? So the cost of building is through the roof. Do you think these costs will just naturally come down and correct a little bit? Or do you think we're in just a full blown bubble, or is this the new normal?
Well, I think asset appreciation is the new normal. Properties and land are a limited resource, right? We can't build and create more land. It is what it is. So
Yeah.
we can build up, obviously, but we are limited from that from the perspective of resource. And if you look at the history of real estate, it always progressively appreciates in value. So I think it's a new norm. Maybe the appreciation rate is tilting more towards the more aggressive side of things. However, there will always be bubbly markets.
Yeah.
We can't avoid that. If you look at some markets in Florida right now and some markets in like Toronto, Canada, they're bubbly, and that's just the way they are. And will they level off at some point? Absolutely, they will certainly level off at some point. It'll become a little less bubbly, and that's going to be reflected too in the type of investors we have come on board. We're going to have investors that come on board that earn it for the long term, and they're more conservative investors, and they want to hold the property for 10 years. And hold the tokens for 10 years. Then we're going to have people who identify the bubbly markets and say, yeah, I'm going to move into this market because it's bubbly and I'm going to flip it frequently. So we're going to have both ends of the spectrum. And I think you will always have markets that tend to be bubbly and markets that tend to be a little more conservative. And then you're going to have markets that have great potential. If you look at Detroit right now, a lot of people would say, oh, that's a terrible market to invest in. It actually could be a great market to invest in because the gentrification of Detroit's inevitable. We're already seeing a lot of electronic vehicle manufacturers move into the old plants that were abandoned by the big three. You're seeing a lot of stuff coming on. You're seeing a lot of cool companies move into that area. A lot of young people are moving to that area because they're like, hey, I can get something really on the
Really
low
cheap.
down here, inexpensive. Build out sort of a community, and then next thing you know, you've got great retail stores opening up, and the market starts bubbling again. So for a long-term guy, Detroit might be a great market.
It's a very good point. Now, one of my next questions was going to be asking if there are secondary markets for the tokens, but you did mention that there are. If you could just expand on what the benefits for having these secondary markets for the tokens might be.
It's liquidity, right? Yeah. So we will, within the marketplace on Vesta Equity, have a secondary market where investors can trade amongst themselves. The long-term plan is to allow those markets to open up even further, to allow those tokens to be traded on other secondary markets. that is going to take time. There are regulatory issues in and around that need to be addressed. And we have built out Vesta Equity within the regulatory environment that currently exists. And the reason we did that is we want to launch something that works for everyone and complies with the current set of rules. Over time, we'll work with SEC and FINRA and say, look, can we adapt these rules based on the new model? There's a reason why these rules existed. They were there to protect consumers, and I fully support that. I think it makes a lot of sense. Otherwise, people can be taken advantage of. Let's work with you and demonstrate to you how we can do this and work hand in hand with them and evolve the model and evolve the market, how it can transact down the road.
Yeah, that's really interesting because a lot of people, it seems, at least the cryptocurrency space, seem to fear regulation, but sensible regulation seems to be necessary to not only bring financial industry into the space, but also to kind of curb a lot of these scams that you kind of see floating up, or maybe not. I don't want to necessarily say scams, but you see a lot of pump and dump kind of schemes that seem to happen, and that has to give a sour feeling to anyone thinking about investing in the space. So
exactly, and you don't want that. You want the concept and idea of blockchain to thrive. You don't want a bunch of people entering it and taking advantage of it. So the regulators exist for a reason, right? They're not there to hamper business. They're not there to cause problems. They exist for a reason, and work with them. And that's the approach we're taking. Work with them, work within the current rules, build out a successful business, and then thoughtfully approach the market and thoughtfully ask for changes. And that's the best way to do it.
So for my next question, it seems you utilize the stablecoin USDC. Are there plans to incorporate any other currencies, such as the algo native currency itself or any other stablecoins?
Well, right now, we've focused on USDC because we made a conscious decision to work with Circle. We did a lot of vetting in terms of who the best partner would be. I feel 100% confident that between myself and my partners, and particularly with Talon's input, our Chief Technology and Product Officer, that we've made the best decision right now. They're a great company. They're great partners. We're working collaboratively with them to develop a lot of processes and back-end mechanics that will definitely facilitate the transactional process. And right now, that's who our partner is. Would we need at any point in time to add in other currencies? We haven't really given that much thought at this point in time. We certainly won't be delving into the world of cryptocurrencies where there's a lot of volatility. We really need something that's stable because it has to be the appreciation of the home that drives the return on investment here. We don't want someone to be, taking a purchase of a house and doing it with, or taking their payment in a volatile cryptocurrency, and the next thing you know, the cryptocurrencies drop through the floor because Elon Musk has said something stupid or said something positive and it's just skyrocketed. That's not what we're building here. We're building, an asset based on real estate, and we want the actual appreciation of that asset to reflect the ROI.
Now, as a follow-up, are you aware of the controversy surrounding Tether USDT? And if you are, did this impact at least partially your decision to go with Circle's USDC over Tether?
We were aware of it, and it concerned us. And certainly a lot of our discussions in and around that we had with Circle reflected that. We didn't want to exactly launch and use any cryptocurrency that had any controversy in and around it. It just adds an element to the mix that you don't really require. I wish them the best of luck at solving their problems. Everyone, fumbles the ball at some point. Hopefully they'll manage the process and fix the issues that led to the problems. And I think they will. But right now, USDC's our partner, Circle's our partner, and that's the partner we're moving forward with. And they're a great company. I mean, you just recently saw they did their SPAC and they're doing extremely well, highly compliant company, which is another reason why we wanted to work with them. The compliance issues were extremely important to us.
Yeah, I was actually just about to mention that. I follow their CEO, I believe, on Twitter, and he seems to be very transparent. And then I just noticed their company was doing the merger through a SPAC, so that's going to add another layer of transparency to the business model, which I think is totally necessary, at least for stable coins. I mean,
Yep.
you have to at least know that they're stable.
Yeah, exactly. And Jeremy is very much focused on that. Jeremy's a great guy.
Yeah. All right. So how will tokenization change the financial world in your opinion? And what are some of your predictions for this type of innovation? If you could expound on that a little bit.
Well, I mean, tokenization touches on so many things. I think in the business world, the tokenizations of securities is obviously a big thing. Tokenization of real estate is a big thing. Allowing the freer flow of trade of these tokens and enabling more people access to wealth. I mean, fundamentally, at the end of the day, that's what it has the potential to do. A lot of people say it's Web 3.0, where the true vision of the web is being delivered now as a result of blockchain.
Yeah.
So it's definitely going to touch on a lot of things. Now, having said that, there's a lot of things that it also creates problems potentially with, and it's always, in my opinion, you gotta buyer beware. You see the tokenization, non-fungible tokens with digital artwork. It's all great. I admire digital art and whatnot. But at the same time, you got to make sure what it is that you're getting, right? Are you buying just that piece? Does that piece stay live as long as the artist wants it to stay live? Do you have the long-term rights to that piece in terms of any royalties if it's used anywhere else, like in a commercial? So I think you've got to, at the end of the day, ask yourself, okay, what's it being applied to? Now, collectibles, like hockey cards and things like that, cars and stuff like that, clearly tokenization of that has great potential value, because then you can actually own the physical element of it and then have all the rights to the digital elements of that particular piece. So if it's a piece of artwork or music or something like that, that's a great application of, or if it's a great, let's say you want to digitize and tokenize a Monet, a great piece of artwork that you own. Okay, you can still hang in your home. Other owners can partake in the ownership of that and the potential appreciation when it's eventually sold. But at the same time, if that piece of artwork is used in an ad campaign, do the token holders get sort of a royalty on that as well and get paid out on that? So that stuff has a great potential impact, again, to create more wealth opportunity. So it's definitely dramatically changed that concept when you can tokenize something that is a physical asset and then tie in the digital rights to it, tokenize securities to create a more fluid market for trade, tokenize real estate assets like what we're doing, or again, opens it up and creates a global marketplace. I mean, our vision is that someone in Australia can sit on their phone and buy percentages of homes all over the world. Vice versa, someone in the United States could be selling their home to people all over the world or buying into that home. So it creates a very different dynamic. So the opportunities to unlock wealth is significant, because if you look at the US market right now, there's about $98 trillion in residential assets sitting there. A lot of that stuff just sits there. It's not unlocked and put to use. And tokenizing that could potentially unlock a lot of wealth that just sits there and put it back into the marketplace to play with and create new wealth opportunities. So it's a significant, because it's a very significant impact to sort of elevate the economy to the next level.
Yeah, that's what I think is the one of the best use cases for NFTs. I feel like when you ask the average person that's heard about NFTs, they just think of like silly JPEG images on the internet and don't really understand what it's for.
Yeah.
But really, NFTs just represent ownership of something. So the use cases are very broad. Like they could be a deed or equities, as you said. It could be really anything, and it's super interesting to see how the space is going to evolve.
Yeah, it's very interesting. Very, very big opportunities in there. But again, it's buyer beware. What is it you're getting? There are companies out there selling, tokenized assets of virtual real estate within gaming environments and stuff like that, and virtual worlds. And I'm like, yeah.
Yeah, I think there's a popular one on Ethereum, Decentraland.
It's
super interesting. And I know they had like a music festival or something inside of it. I mean, the idea is cool, but it's a wait and see for me type of idea for sure.
It is for me. If there's no real asset behind it, nothing you can touch and feel eventually, I'm sort of like,
people are buying these digital properties for like $700,000. I'm like, poof.
Yeah, that to me, to me it's crazy. But who knows? It'll be an asset class that exists out there. Certainly not an asset.
Yeah, we're gonna be wrong. We'll be wrong. It won't be crazy in like 10 years.
Yeah, possibly.
So, will this investment strategy with through Vesta Equity ever open up to retail investors? I noticed it was, at least right now, solely accessible to accredited investors.
Yeah, it will eventually open up to retail investors. The idea is to get it up and running, work with accredited investors, and then eventually open it up to retail investors. There's certain regulatory steps we need to take in order to do that, and some of those steps take some time. So what we want to do is build out the platform, bring on accredited investors, and then eventually open it up to retail investors. That's the goal.
Awesome. That's great to hear. And as a follow-up to the last question, are there plans to expand the services Vesta offers that we're discussing currently? Um, as of right now, I know that you offer the tokenization, well, the ability to tokenize your home equity, but is there any other plans for any business ventures down the lines for Vesta Equity, or is this kind of your sole focus and you're going to expand on this for now?
No, I think right now focus on what we're doing, execute on it
Yeah.
really, really well. It's a massive market. I mean, just on an annual basis in the US alone, $2.5 trillion in home equity financing is accessed.
Yeah.
And as I mentioned to you, 98 trillion in underlying assets, and that's just the US. So you can imagine you start expanding that globally into Southeast Asia, into Europe, into South and Central America. You're talking trillions and trillions and trillions and trillions and trillions of dollars of assets that we could potentially, bring onto our platform. I would love to bring them all onto our platform. It's not likely going to happen, but it's massive, right? It's one of the largest assets out there.
No, that makes complete sense. I was actually just read a stat earlier that said in 2010, it said the value of homeowner equity in the United States increased from approximately 8.7 trillion US dollars in 2010 to approximately 21 trillion in 2020. So if this is correct, and then this is a stat from Statista, so I would assume it's relatively correct. But if that's correct, I mean, why really branch out? That is a huge market that you could capitalize on.
Yeah. Yeah, exactly.
So I was reading up on the website, and there was a bunch of things I found, and one thing I found really interesting was that you and your team seemed to see a society that was riddled with debt. And I was just wondering, what are some other potential solutions to the debt crisis aside from some of the great innovations we just spoke about?
Well, I mean, part of the problem with debt right now is that as a society, we too readily accept it. It's just become par for the course, right? And, that's particularly Western democracies where the idea of debt is, widely accepted and widely used. And we're starting to dig ourselves into a hole. And I think our mindset needs to change. So part of that is technology companies and other companies innovating and providing alternative solutions. Because I do think you can only create so much debt to the point where things just collapse because it becomes unmanageable, right? And we have governments that finance everything now through debt, as opposed to creating intelligent solutions to those problems. And you see that in the environment right now, where it's like, let's just spend tons and tons and tons and tons of money and raise taxes, create carbon taxes, and create more debt. That's not really going to solve the problem, right? So we need to apply intelligent solutions to problems that actually fix them, as opposed to just creating debt. And people got to get out of this idea that, like a credit card's a great instrument to use. I can go anywhere in the world and use a credit card to transact. And as long as I pay that credit card off right away, it's a great tool, right? The minute you start using that credit card to finance things, you're down a slippery slope, because the compounding interest in a credit card makes a Ford mortgage look like a joke. And people have got to understand and educate themselves and become more knowledgeable about what does debt mean and what can it do and how can it impact my life. So what we're doing is obviously provide a mechanism to tap into an asset class that typically involves a lot of debt. And that will remove a big burden. So if you think about it, if you can actually own a home and suddenly have no more Ford mortgage to be concerned about, which means you have no monthly payments, those payments that typically would have gone to the mortgage and to the bank are now yours. So what can you do with that money, right? You don't suddenly need to go borrow money to go on a trip. You'll have the money to do it, right? So we're freeing up people's cash flow. They're not becoming, serfs to the banks and slaves to the bank with that monthly payment every year. And if they, oh my God, I lose my job, I'm screwed. And if they lose their job, then what's the government going to do for me? And then the government steps in and starts providing money because they've lost their job, and that just creates more debt, and it becomes a spiraling problem, right? So we got to start dealing with issues at the heart of the matter. And to us, a big part of that is home ownership, right? We have this dream, the American dream of everyone owning a home. Well, how do you really help them do that? Not by creating more debt. That was part of the big problem in the last financial crisis. More debt, lending money to people who couldn't really afford it. Technically speaking, using our platform, they could afford it. They have some capital. They could use it to buy a home and bring in other investors in it. It's a much more streamlined, for lack of a better, streamlined process and a much more equitable process to actually own a home without debt.
Great. Well, that's kind of a segue into my next question. On your website, I noticed that it said you're only allowed to sell up to about 80% of your home equity. And you also have to be free of all liens on the home. So essentially, you have to own the property completely. Yeah. Are there plans to open this up to homeowners who still have a mortgage and maybe have about 50% paid down, so they have, say, about 50% of their home worth in equity?
Yeah, there is. And we've got mechanisms in order to help them exit out of the mortgage, which typically would entail penalties and stuff like that with the mortgage companies. So we have built that out. We're just not launching with it in the early stages because there's added complexities to it.
Of course.
So right now, being mortgage free, of which 40% of homes currently in the United States are mortgage free. Really? So we're targeting those homeowners first, and a lot of those homeowners would typically go get a HELOC or would go get a reverse mortgage on the property. Given what you'd have to examine their age. Obviously, you have to be 62 and over to get a reverse mortgage. But then there's a chunk of people between the ages like 55 and 62 who just sit on the asset and don't access that equity because they've really no great alternatives. So they're tapped into that market. So from that perspective, we're essentially trying to very much focus on those types of people that want to access their equity. I hope I answered your question there. I sort of sidetracked there.
No, you did. And the first thing you said was really interesting too, because you said, if I understood it correctly, basically this could help people remove themselves of their mortgage. So say you had 50% of your house paid off, and then you want to sell some of your home equity, tokenize some of your home equity. You can then use that money as you wish, I'd imagine. So you could apply it to your mortgage. But then you said there were routes that you could take to avoid any penalties through whatever you have going on.
It's not necessarily avoiding those penalties. So if you've entered into a contract with a bank, essentially, and you've got those penalties built in, how do you help facilitate them exit out of that mortgage and also sort of roll out those penalties into the new financing that they'd be doing through us, which would require no debt, right? So it's that process of exiting them out of the mortgage, paying off the penalties, and getting them onto our platform. Okay. So there would be that added burden of those penalties rolled into the equity they're looking for. There are legal elements that we have to address and execute on. So that's that process. It's a little more complicated, but it's extremely doable. And you could also take part of those penalties, roll it in, and then the homeowner could offer a bit of an added perk on the appreciation to the homeowner, or take a little less of the appraised value on the home to offer that up as part of the perk for taking on that added burden of the penalty into the money being sought as part of the equity in the home.
Perfect. Now, the Algorand Foundation gave Vesta Equity a grant, and I was wondering, what were you able to do now with the grant that you may not have been able to beforehand?
Well, typically when you're building out a product, you build it out to a certain level in order to be able to demonstrate the mechanics of how it works. And then oftentimes you need to go seek some more funding to actually build out some of the back-end elements of the funding, back-end developments of the product. So we'd gotten the product to a certain level. We're able to demonstrate how it worked. We'd identified all the technology requirements. We'd built out some of the technology. They're allowing us to take it to that last mile. So by getting that grant, we're now able to hit our target launch date of October for the product to be completely ready and market ready. And we're using that money and applying it directly to that.
That's awesome. What's it like working with the Algorand Foundation? Do you have direct connections, or was it just kind of a situation where they gave you a grant and then you're on your own to figure it out?
You have to apply.
Yep.
We do have a relationship with Algorand, the parent company, but the foundation is a separate entity, and you have to actually apply. And there's an application process that you have to go through. They try and keep it as fair as possible for all applicants, which is really great. And you go through the application process, and it's not too dissimilar to going through a venture capital process where you have to submit the right documentation, you have to submit your deck, you have to do a business plan, you have to do a presentation, you have to answer their questions. They have a series of questions, and then they take it internally and they review it and they decide, are we going to fund this or not? They have their own internal parameters that they gauge. It has to obviously contribute back into the Algorand ecosystem. It has to do some good. That's part of the foundation requirement. They want to see product so solutions going into the marketplace are actually going to help people as well, which we feel we obviously are doing with what we're building out. And we met their criteria, and then that's how they provide the funding. So it parallels raising money with venture capitalists to a certain extent, except it's a grant at the end of the day. So they're not actually taking equity. They provide you the money. And the goal is for them to build out an ecosystem of companies using the Algorand solution and doing good in the community.
It's really interesting. I'm super interested to see how the governance model that they're going to incorporate into the foundation is going to work. I don't know if you know too much about that, but that seems really interesting, trying to decentralize sort of the decision making of the foundation itself and really add another layer of decentralization to the protocol itself, which I'm not sure exactly how it'll work. And, they haven't really rolled it out yet, but I'm super interested to see how that works. Do you know anything about it?
Well, I know as much as you do. They haven't revealed any details publicly about exactly how it's going to work, but I actually think it's a great idea, right? Decentralize that, and then it truly becomes a foundation that will achieve the betterment and the goals that they really want to achieve by allowing other people to provide input into what should get and what should not get a grant.
Yeah.
So I think if you really want to build a foundation that's going to help, that's probably the best way to do it. And again, here's another application on blockchain where you can do something like that, which otherwise would have been impossible to do. So I think it's actually a great idea.
So I was watching a podcast called The Money Movement on Circle's webpage with yourself and the CEO of Securities, which is another company I closely follow. There seems to be a lot of excitement around stable coins, but I was wondering what other blockchain projects are out there that you have your eyes on or that maybe excite you, or just applications of the blockchain that you see popping up that are really interesting.
What I think is fascinating, and blockchain is going to be used to is verifying provenance of products. So, people don't realize how big the sort of knockoff market is for high-end products like Gucci products and stuff like that. Blockchain will actually enable people to buy a product and actually be verified that that actually is a Gucci product. And it could really take a real dent out of that marketplace because it's a multi-billion-dollar market for fraud products.
Yep.
And who ultimately loses out on that are the companies who produce these high-end products, the consumers who buy these high-end consumer products. And it doesn't have to always be a high-end consumer product. I mean, you get knockoffs of, Apple products are knocked off everywhere.
Yep.
To take a walk down a marketplace in any area in any city, and there'll be knockoffs of everything you can possibly imagine. So, and in some cases, some of these knockoffs are dangerous, right? So that's another element to it too. So if you start thinking about, I saw a statistic and I can't remember the exact amount, but it was the UN that did an analysis, their aviation wing of the United Nations did an analysis on fake aircraft parts. And it was disturbingly high. So the manufacturers don't know. It's not the manufacturers that are at fault. They don't know because it's so far down the supply side stream of things that they don't know that that product actually originated as a fake and ended up through the ecosystem into a part, into another part, into another part, to the final part they bought. And that part that's in that part was actually a fake part, like not a truly certified part that meets the engineering requirements. So by applying blockchain into that, the provenance of that would be verified at every step of the way. And that to me is something that has a huge potential implication to those markets and ensuring that a product is what it is. It can be applied into olive oils and wine, where there is also a lot of fraud, into products that could affect the security and safety of people using those products. So I think that's a huge opportunity. Another opportunities is, DID, verifying people's identification through the blockchain, decentralizing that whole thing, and enabling people to maintain their privacy, but still having a digital identification. That's another huge opportunity where it could be applied.
Yeah, I've seen a lot of interesting takes on how to essentially give data rights back to the consumer and essentially allow you to, sell them off via the blockchain to different companies that wish to have your data, as opposed to just it right now. It's like a free for all for your data on the internet. Like basically anyone can get a hold of it. So
yeah, there are browser companies popping up that are offering that type of mechanism using a blockchain, where you decide what you're going to see and not see, and based on that decision to see or not see and how your data is going to be shared, you end up being paid in tokens.
It's really interesting.
Yeah, I think the company's called Brave. I can't remember the name at the top of my head, but they're actually one of the companies out there doing that. So it's the browser that is the gateway to everything on the internet, and by doing it through the browser interface and allowing people to say yes and no to what they turn on and off, changes the dynamic enormously, and will change, if it's widely adopted, change the dynamics of the ad marketplace and how it's done. Because when you think of it, at the end of the day, again, there's a lot of people making money off your data. Is that equitable again? No, it's not. You should be making money off the data. You should be getting discounts. So if Nike's going to market to you and communicate to you, they should be offering you discounts directly and paying you directly. No, they could either pay you in Nike tokens, and you could take those tokens and buy a Nike shoe, or they could be paying you in just discounts. Like, those are the things that I think are going to take place in that space, because there's a generation out there that seems to be okay with their data being bartered and sold, and companies like Facebook and Google making billions and billions of dollars on that data. But I think the generations coming up are a little more savvy. You're more digitally savvy, and they're sort of like, whoa, 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 whoa. That's my data, and I don't want you using my data to make money off of me. If anyone's going to get remunerated, it's going to be me, because I'm the one producing that data and that activity. Because when you think of it, everything you do and everything you buy is tracked. And I've been part of that industry. Both Imran, my partner, and I have actually worked in the digital acquisition strategy, customer acquisition strategy. And the data available to unscrupulous individuals can actually be unbelievably personal. And that's got to change. And blockchain will enable that.
I feel the same exact way. So now, one of the questions I feel like everyone's going to be wondering is, why did you choose the Algorand blockchain, and what other blockchains were considered before you came to your decision?
We took a look at all the blockchain solutions out there initially, and it was to really do a fair assessment to what's out there and to how it could be applied for us, and producing a product that for us would be scalable and lessen the risk of potential failure. And that's something that's very important, because we're dealing with something that is important. It's someone's asset, it's someone's home, and we're getting people to invest. So it has to be done properly. Algorand, the reason we ended up with Algorand is Algorand has been purpose-built to actually be used as a usable technology. It's not a technology that evolved in and around the idea of a cryptocurrency. Yeah. And I think those platforms will continue to exist, and that element of the blockchain world will continue to exist. I think there'll eventually be a little greater level of stability in terms of blockchain cryptocurrency values over time. But Algorand was purpose-built to do exactly what it is we're doing. Their tokenization process, smart contracts, everything was built with this in mind. So that's the difference. When you look at how other blockchain solutions have evolved, they've essentially evolved. They came up with this idea. It went from here to here to here, and that's great. But Algorand wasn't done that way. It was actually purpose-built to be a solution. And fundamentally, at the end of the day, it's one of the reasons why we built it. There was a whole technology assessment done on it that Talon worked on. But at the end of the day, it was simply the best option out there for us to launch this product on. And we've got a very good working relationship with the Algorand product development team that plays into this as well. And there's been a lot of collaboration. Our Chief Technology and Product Officer, Talon, has a history with Algorand as well. He had been working as a developer with them for about 3 years, independent contractor, but there is that relationship. So there's that intimacy and knowledge about the back end of Algorand that we also were able to assess. And without question, to us, they're one of the best companies out there. You look at them, Silvio, the CEO, Turing Award winner, top prize in math. Their advisors comprise of Nobel Economics Prize winners. So great team, great people, and an excellent organization as well. And that's a factor you have to bring into it as well. Who are the people running this company? And everyone, Sean Ford, Steve Kokinos, they're outstanding individuals and great people to work with.
That's actually one of the reasons I fell in love with the Algorand project myself. I mean, I've been into the cryptocurrency space for a few years now, but they just seem to have the all-star team. A lot of their team is right out of MIT, which is maybe about 30 minutes from me, as is their headquarters. So they also have like a little bit of a home-based turf for me. So, maybe I'm biased in that aspect as well, but it really is an exciting project. One thing I want to touch on that a lot of people seem to just focus their attention on the financial aspect of how blockchain could change, the financial industry. But one of the things that I kind of overlooked with the Algorand governance model is how we can maybe expand certain governance models through the blockchain to our actual democracy, which I think the prospects of that are truly exciting, because representative democracy made sense at a point in time, but it seems that blockchain might give us the ability to turn our democracy into a more of a direct democracy and give us the ability to directly choose, yay or nay on certain votes, or maybe even where our tax dollars are going. So if we support certain programs, but we don't want our tax dollars going to, say, whatever your opinions are. So it just opens up a level of direct democracy, or the ability for it, that was maybe even a decade ago unheard of. Do you think we'll eventually get there, or do you think the powers that be won't relinquish that power?
I'd love to see us get there, because I agree with you. The democracies we have are great, but they're not necessarily working that great right now, because they were built for different times. And how do you evolve those into a new paradigm where you do have a more of a direct democracy, right? Where your vote's actually counting towards something, it's not wasted. You may be able to allocate your tax dollars the way you see fit. Now, one could argue that could cause chaos. Right?
It's just an idea.
There would have to be checks and balances built into how it works. But I do think our democracies need to evolve. There's clearly red flags going up right now about how we're seeing problems that are endemic. Now, will the powers that be accept that? Maybe we need to go through an entire generational change before that happens. I think there are definitely people in power right now who would not want to see that, because it is about personal power for them. I do think there are countries right now in the world where it could be many generations before we see that. I don't see the Chinese Communist government changing how they run the country right now. They basically run it like a company. We're very authoritarian, top down, and that's how they run it. They keep all their very wealthy, successful people very close into the Communist Party. Same with Russia. Russia's basically an oligarchy run by, Putin at the top of it, and then his oligarchs below him, and it's run that way. It's a bit like a mafia organization, essentially. So I think it will take time. Do I think the technology can do it? Absolutely. I would love to see it happen. It's just a question of, does it happen in a bubble in the West and doesn't happen elsewhere? How would that affect international dynamics and international relations? Very, very hard to say. Like, well, what would happen if for some reason it was decided that military spending collectively by the population, for whatever reasons they decide, is to plummet to next to nothing? Where would that leave Western democracies? Or in this case, maybe we could refer to them as direct democracies, when other countries aren't adapting that and have spent a substantial amount of money on the militarization of their economy. Suddenly we're in a weakened position and volatile, vulnerable. So it's a hard thing to gauge. Could it be applied at a municipal level and tried out there first? Yeah, it could be. Or could there be some guarantee that if we're doing this, the population agrees that, military spending is a priority? And I'm not advocating, massive militaries or, being on a war footing all the time. But unfortunately,
Yeah,
there are enemies out there. Yeah, you got to be careful, right? They just don't like your lifestyle, and it boils down to philosophical issues, and they'll do everything they can do to harm you so that you end up in a vulnerable position and they win, right?
Yeah.
So yeah, it's a tough call, but I think changes do need to happen. I think blockchain can enable changes, and I think we can start taking some baby steps, and it could be on certain levels that you deploy it, try it, see how it works. We always got to look what we mean by representative government too. I don't think it makes sense for a state with a small population of people has the same representation in the Senate as a state like the size of California. Just doesn't make sense, right? Yeah. That's crazy. So
well, I think that's why. I mean, at least an argument they maintain both houses, so that way, at least in the House it's represented by population, but then in the Senate each state gets two. And there's some arguments that should stay that way because it gives a voice to the smaller states, but then there's some argument that the Senate, the bigger states don't get that much in it. It's such a complicated thing that I really feel like it needs to be fixed.
Yeah, originally the Senate was supposed to be sort of like the body that pauses and takes some time to think about things. And
of course,
they weren't elected originally. That wasn't the intention to have them elected. They were appointed by the state. And we're sort of like removed from being Democratic or Republican in that respect. They were less oriented towards their political ideology, and now, unfortunately, you see what's happened in the Senate is that they've just become so polarized from along the political ideologies of both parties that it's almost making it ineffective. At least in the House of Representatives, it does reflect the population's will.
Yeah,
to a greater extent.
To some degree.
To some degree, because it's based on the true representation. So yeah, there are issues. But a lot of Western democracies have got to evolve and change too. So they were built in times where they worked. Now they've got to evolve to something better.
Of course. Well, I mean, this mostly wraps up the questions I had here. Is there anything you'd like to add to the discussion? Anything that you might want my listeners to hear?
Yeah, one of the things we're doing is we're getting prepared for our launch, and we're looking to launch with homeowners on board and investors on board. So we've acquired a pretty significant database to date of people who've signed up and said, hey, they want to participate, but we're always looking for more. So the best thing to do is go to vestaequity.com, .net, and then so vestaequity.net, click on the Let's Connect button.
I'll leave a link down below also.
Yeah. They can actually fill out the form, and then we're going to be sending them something a little more specific about their property or about their investing style. And hopefully we will get them to participate in the early launch of the platform because we want to launch with people on it as opposed to just launching cold. And we're always looking for, at an early stage, we have very specific requirements. And we want them to participate too in the marketing activities we're going to take as customer testimonials. And for homeowners, we're paying for the appraisal and inspection. We're paying for professional photography. We're paying for the closing costs, and we're waiving our fee for an entire year. So great benefit for you if you're participating and you join up and sign up and are approved. You're going to have no costs at all to get on board the platform.
That's awesome. When do you plan to launch?
October 2021. Yeah,
that's coming up. That's exciting.
Not too far off. It's not too far off. So the pressure's on the development team right now.
I bet. It's exciting though, I'm sure.
It's now public.
What's that?
It's now public.
Oh, was this the first you were mentioning when?
No, it's not, but it's the first time I'm actually seeing it on video.
Oh, perfect. Cool. Well, glad to hear it here first.
Yeah.
All right. Well, I really appreciate you talking to me today. Of course, I'll leave a link down below to vestaequity.net. People can check out everything you just spoke of. I really suggest you do. And yeah, this has been great.
Yeah, I really appreciate you doing this interview with me, and I'm looking forward to seeing the results and comments back and feedback. And definitely would love to do it again down the road when we've actually launched and we can actually take you through the entire product and maybe do a demo online with you.
Oh, that'd be awesome. I'd be glad to have you back. Now,
Perfect.
just let my followers know where they could reach out at. Are you guys on social medias? I know I follow you on Twitter, but
Yeah,
anywhere
we're on
else?
Twitter. We're on Twitter. We're on LinkedIn. We're on Instagram, and we're on Facebook. So we're at all those locations.
Awesome. Well, go give them a follow. I really appreciate having you here. Thanks so
Perfect.
much.
Thank you, Justin. You
Take
take
care.
care.
Thanks so much for watching all the way through. This was such a fantastic interview. I'm super grateful Michael made the time for me today. If you enjoyed the content, please give it a thumbs up and feel free to subscribe to the channel. It really helps me out a lot. Or check the description down below for links to Vesta Equity and links to different brokerages I use. There are a bunch of bonuses if you use my sign-up links, whether that be free stocks or a couple extra bucks or a little extra Bitcoin. There's a couple links in there you can check out. That being said, I really appreciate every one of you, and I will catch you in the next one. Thanks.